Joining us right now to answer those tax questions is Tony King of King and Associates. Good morning.
Good morning to you.
So things are not dying down. We're in the heat of it, right?
Absolutely.
All right.
No relief for at least another 60 to 90 days.
There you go. All right. Well, let's get to these questions. First up, I live in Maryland and sold a house in North Carolina last year in April. I made about $77,000. Do I have to pay taxes on that money? Also, I paid off my car over. Actually, we're going to stop right there. Do I have to pay taxes on that money?
Selling of a non-principal residence may be subject to capital gains. It sounds like she lives in Maryland, but she owned property in North Carolina. The $77,000 could be subject to capital gains, but you first must determine how much the house cost and then compare that to what you sold it for.
Okay, next question. After our mother passed, my sister got a $54 check from the nursing home. To cash this $54 check, she had to obtain a $250 EIN number. Why, and can she reverse this? It's not worth $250. Will we need this number to settle other IRS matters in her estate?
That sounds kind of suspect because in order to obtain a federal EIN number, you can get that for free at irs.gov. Okay. I'm not sure why anyone would have to pay a $250 fee to get an employer identification number. Mm-hmm. I would not try to cancel the number because they may need that number for, mm-hmm. for further estate purposes. So I would just hold on to it, but irs.gov, you can get your employer ID number for free.
Okay.
Right.
All right. Well, my employer did not take enough taxes out, and now I owe. I haven't changed anything on my W-4 in 2017. What should I do?
Go back to the employer and make sure that W-4 says either married zero or single zero. Just double check to make sure that you are having the appropriate amount of withholding allowances. In addition to that, if they are set like you want them to be, married zero, single zero, you can ask your employer to withhold an additional amount above whatever the tax table says.
Okay. Next question. How do you calculate for taxes for a home office?
Home office tax, you would use Form 8829. If you have a small business that you're running out of your home. Otherwise, you can also use a Form 2106. And basically what you do is compare the size of the office to your entire square foot of the house and take that ratio, 10%, 15%, 8%, things like that.
I see. All right, next question. Can I claim an older brother who currently lives with me and whose only source of income is Social Security?
That is true. You can. As long as the brother does not have any earned income, Social Security is not considered to be earned income and therefore is not calculated in the dependency exemption.
Okay. I have a townhouse which I rented out. Should I be claiming some sort of depreciation on that townhouse? If so, how do I go about doing that?
Absolutely. Rental property is reported on Schedule E, and that's what that gets attached to your 1040. So you account for your rental income and all rental expenses, mortgage interest, real estate tax, depreciation. Depreciation is the systematic write-off of the cost of the house. Mm-hmm. Rental property, typically you have to write off over 27 and a half years. Mm. So you take the cost of the property divided by 27 and a half, and that's the depreciation deduction every year.
All right, thank you so much. All right, and if we didn't get to your questions this morning, we'll try and answer them next week, so keep them coming. You can email those questions directly to taxquestions@wbaltv.com or go to our website, wbaltv.com, and click on Consumer Alert.